If you don't approach trading systematically, then you can't quit your losing habits and you cannot make the most of your profitable ones. Your risks when trading must be precisely defined, but most traders don't even size their positions. They operate on a gut feel or go all in when things get really desperate. Instead of entering into a trade that was planned because of your rules, you enter these trades based off your emotions. Fear, greed, and these are what gets you in trouble and turns trading from a systematic task to something no different than gambling in Las Vegas. Higher leverage means larger profits. Leverage is a double-edged sword. This is something you have to be very careful with. I'm not going to sit here and say not to use leverage, but leverage does not mean larger profits. There's a time for it, there's a place for it, and I highly recommend that you don't mess around with leverage until you understand when that exactly is. When traders lack a strategy and leverage that made them very profitable, will then take back all their profits and more. Again, at the heart of this problem isn't the leverage itself, but it's lacking that systematic approach to the markets. Another myth, what goes down will eventually rise. Now, William O'Neill, founder of IBD, is famous for teaching the ordinary person how to consistently profit in the market from leading growth stocks. He showed that low-priced stocks are often low for a reason, and high-priced stocks are usually high for a reason. If a stock's trading at 52-week lows, there's probably a reason why nobody wants it, and it's going to continue to make fresh lows. If a stock's at 52-week highs, there's probably a reason why it's at highs. The institutions want it, and it's going to continue to make highs, and this was something brought out by William O'Neill. The best names in the market tend to make highs and then new highs because they have strong earnings, strong sales, and very high profit margins. This is where the approach buy high, sell higher comes in. When you're new to trading, you usually hear buy low, sell high. The stocks making lows are not the ones that we're interested in. We're interested in the stocks making highs, so we're going to buy high and we're going to sell higher. More indicators are better is another myth that you frequently hear. There's thousands of indicators for almost every type of price movement, market dynamic, time frame. Whatever your trading style is, there's an indicator for it. But having more doesn't improve your trading, it actually reduces the reliability of the signals. You need to focus on very few indicators, the best ones that are defined by your strategy that help you, and use them consistently. Bringing any more indicators for extra validation, you're not going to get all indicators lining up all the time. And if something doesn't have to do specifically with your strategy and your plan, all it's going to do is give you analysis paralysis, cause you to not jump on something that you should have, or give you a false signal to make you sell prematurely. Now, the last myth, 80% of traders quit in the first 2 years. Technically, this is true. However, there's a reason. Most traders aren't seeking out the right mentors. A lot of times when you come into trading, they're seeking out how to get rich quick, how to trade penny stocks, instead of time-tested methods. So instead of putting in the work and doing your homework, it's a lot more attractive to fall into the emotional hype of getting rich quick. And the people that try to get rich quick in the market are the ones that decimate their accounts. They blow up multiple accounts. It just doesn't exist. The people that are selling you their get rich quick schemes are getting rich from selling that. They're not getting rich from the strategies that they imply. So you want to find a mentor that trades a time-tested strategy, something that matches your trading style and your own personality. You can't force yourself onto a trading style or time frame. You have to choose one that works the best for you and your lifestyle. Do your homework, put in the work, put in the time, and you'll have a much better outcome than the 80% of traders that come to the markets just looking to get rich quick.